Welcome back, traders and investors. We have Ann Logue on the line, and she's a freelance writer and consulting analyst and the author of the book Day Trading for Dummies. Ann, how you doing today?
I'm fine, thank you, and thank you for having me on the show.
Okay. Day Trading for Dummies. What inspired you to write that book?
Well, um, there was demand for it, and I think that what I wanted to do was make sure that people thought of day trading as a business, that it is not something that's necessarily easy, that for a certain type of person, it's a great way to make a living, but that it is most definitely not for everyone. And so a big part of my book was helping people figure out which person they are, and to help them avoid making really expensive mistakes, because you can make some really expensive mistakes. The joke about, if you don't know who you are, the market is an expensive place to learn is true. And so that was really what I was thinking of when I wrote the book. I live in Chicago. I know a lot of traders, and the successful ones, it suits them. They love it, but it's definitely not for everyone. And I think there's a perception. You see the infomercial people, and you see some of the pop-up ads that make it seem like it's easy. And maybe it is for a certain type of person. And I think but if you're going to be successful, you need to think about how you're going to track your performance and how you're going to manage your risk, how you're going to set your limits every day and every trade so that you're going to be around to trade tomorrow.
When did you write this book?
The first edition came out in 2008, and we just released the third edition this year. And a lot of things have changed. I mean, besides the whole turmoil in the financial markets, I think the increased presence of automated trading and the increased role of dark pools has had a huge effect on what kinds of strategies people can use. I mean, in the first book we still mentioned scalping, and you really can't scalp anymore. But on the other hand, currencies have become a much bigger part of the day trading market, where we've seen so much volatility that it's created a lot of interesting opportunities for people who are interested in that market.
So, what are the updates that so you talk about dark pools? Do you talk about high frequency trading in the book at all? You said
Oh
automated
yeah,
trading.
well
Um,
both. Because they're very similar, and they make it a lot more difficult for an independent trader to participate in certain markets.
so like what I've always said, and this is, the adjustment that we made because at Bright Trading, we're a professional day trading firm. So obviously, we've got a lot of experience in this. And the way our traders have adjusted is by just like exactly what you said. We're not scalpers anymore. We used to sit on the bid and sit on the offer and just try to make the spread. But we've
Hmm.
pretty much been replaced by high frequency traders in that regard because they're quicker. They're more efficient at doing what, you're never going to be faster than a computer. So they're just a little more
Hmm.
efficient at doing what we used to do. So how we've adjusted is by just lengthening that time horizon, but not out to weeks or months or to
Hmm.
years. We've just lengthened it from probably seconds to probably, a little longer than minutes, maybe even to hours, like becoming real day traders. Do you think there's still a place in the markets for like real true day traders?
I think there is. I think it's very much for, it's asset by asset. And because of a lot of changes in regulation that are starting to affect high frequency trading, it may cycle back, because the opportunities are becoming smaller and smaller for for the biggest computers. And I think biggest computer traders, I think some firms are starting to question whether or not, having millisecond advantages are really going to make a difference. And I think that might normalize the market a little bit. But I think you're right. I think allowing some more time for an idea to play out, and looking less for really short-term inefficiencies and more for trends playing out over the course of a day is going to be a better strategy.
Okay, as far as the high frequency trading, I mean, and it's difficult to compete with them. There's no doubt about that.
Right.
But do you think that I mean, like they're present in more like the lower price stocks? Where do you think they make it more difficult to trade? Is it in the lower price stocks or the higher price stocks?
I think it's the higher price stuff because that's they're looking for volume as well, and so when you're going to find the volume, you're going to find it in more of your big brand name companies. You're going to find it more in your index stocks that are in parts of the indexes. So that's where you're going to find the and again, when you're talking about milliseconds of trading, you're talking about things that really aren't inefficient. It's almost it almost starts to take the part of gambling. I mean, where you're betting that there's an inefficiency because it's really hard to figure out if there'd be one for such a short term. And I think that's where some of the changes in regulation in dark pools are starting to come into play about whether or not some of these inefficiencies are almost manufactured. And I think if we get more transparency on the dark pools, then that's going to open up the market for more people as well.
What are your thoughts here on the overall market? Because we had Michael Lewis coming out 2 months ago saying the market is rigged. There was a big uproar in the media here. Do you feel that the markets are rigged too? Do you feel it's rigged for the machines or rigged against the little guy?
I think it's rigged against the little guy.
You
really do.
You really do?
Because I think that so much of day trading is based on finding inefficiencies. It's not so much, and it just becomes too difficult to find them with the kinds of equipment that most traders have. If you're doing more trend following, you have a little more opportunity to be analytical, and you have a little more opportunity to see things play out, and you're less likely to lose your trade to somebody else's computer. And I think that's something that people are starting to address, because if the primary purpose of the markets is to raise capital for businesses, you start to wonder if these types of trading and if the dark pools are really helping with that. And the other thing is that since the first pools started to be formed, the ECNs in the late 90s, early 2000s, the market's done worse. They haven't contributed to a robust stock market. They haven't contributed to a robust financial system. And then you start to wonder what's their purpose, right, if you're thinking from a regulatory perspective. So I think there's a lot of interesting things to watch that may create some more opportunities for people. And I think that a lot of what Michael Lewis was saying wasn't necessarily new to a lot of people. I think I was surprised at how people were. I was surprised that so many people were stunned by his book and by his revelations, because they didn't seem all that new if you're in the market.
Right. Okay. So from your book, you've done a couple editions of it. What is just the best few nibbits of advice you could give to people that are interested in getting into day trading or doing it now and struggling? What a couple bits of advice could you give to traders?
The biggest thing is approach it like a business. That even if you're doing it for only an hour a day, then approach it like a part-time job where you have specific hours and where you are watching your limits. And that's the next thing, is to have a system for sizing your trades, have a system for setting your limits. The system you choose may depend on your own personality or may depend on the assets that you trade, but having that discipline is the key, that a lot of this is psychology. Video games and psychology. That's one of the, a friend of mine who's a trader says that that's his job, and I think that's a great way to look at it. That you need to set the limits, because if you're going to do this, you have to be able to trade tomorrow, right?
Correct.
The third thing I would say is having a system for evaluating your trades. So, keep some kind of a trading diary, whether it's a cheap notebook or, some records online, so that you can get a sense of how you respond to different factors in the market and what types of trades are working for you. Because there is a psychological element to this. Some people are going to find certain trading systems work better for them than others. And I think along with that is the usual back testing, do some paper trading as you, refine your system. But the back testing is a really key way to, get started and then, start moving into real markets and real dollars.
Okay, all right. We've had Ann Logue here, freelance writer and consulting analyst and the author of Day Trading for Dummies. So thanks, Ann, for coming on. We're going to give away one of your books, and we hope to have you back on again soon.
That would be great. Thank you so much for having me.
Okay, thank you.
Okay. Bye.
Bye-bye.